Hi, my name is Clinton Donnelly from Donnelly Tax Law. Today I want to talk about Form 3520, which is an annual return for people who've had financial interactions with trusts or have received gifts from foreign persons. This is an informational return, and with all international information returns, the focus is on money laundering. There is no tax for failing to file this return. However, there are very stiff penalties if you do not file it or file it incorrectly. Money laundering is about the conversion of illegal profits, usually from crime, into legal, legitimate funds and assets. And a trust is one of the most slippery devices that's out there to facilitate money laundering. So you can have illegal donations to a trust, and then the trust gives a payout or gift or distribution or transfer, whatever you want to call it, to someone else, and all of a sudden it looks legitimate. So the IRS is very inquisitive about all the details related to this. This return is mandatory if you've received one. It applies to 4 different types of people. The first person would be someone who's made a transfer to a trust. Now, oftentimes trusts are grantor trusts, which means somebody granted his own assets to the trust. So that person is actually making a transfer of his own assets to the trust. Those transfers need to be recorded in Form 3520. Also, they should be reported on Form 926, which is the transfer of assets to foreign persons, in this case a foreign trust. The second use of the Form 3520 is for an owner of a trust, who would probably be someone who was the grantor. And typically there's very few owners of a trust. It's an individual, a couple, a family. The third use of this form is for someone who has received a benefit from the trust. And that's a very loose word, benefit. That means they received something from it. It might be the owner, or it might be a third person, the children, the heirs, or whatever. Anything they receive, they're a beneficiary. They have to report it here. And the fourth person who has to use this is anyone who has received a gift from certain foreign persons. That's wide open. There's no connection. Some foreign person who has no obligation to report to the IRS gives you a gift. You have to report that here. So it's an annual report. It does not go with your 1040 tax return. It has the same time frames which it's due, but you do not, you send it to a different location. There's no tax associated with it, but failure to submit Form 3520 is a penalty to the owner of $10,000 the moment the IRS realizes and issues you a letter that this hasn't been submitted. And that penalty goes from $10,000 to $50,000 in 6 months if you haven't responded to the IRS to correct the omission. In addition, there are substantial penalties in the neighborhood of 35%, more or less, different situations, of the value of the entire amount of the funds transferred, the value of the trust, a couple different ways of looking at that. That is pretty significant. And if you haven't filed a 3520, then there is no statutes of limitations limiting how far back the IRS can go to assess these fines. So they can go back as far as they want, which is why it's very important that everyone who has given to a trust, owns a trust, a foreign trust, had a benefit from a foreign trust, or received foreign gifts, that you file a return every year so that you can at least start the statute of limitations clock to protect yourself. That is the story behind the 3520. It is a different form than 3520A, which we'll look at in a different video. Thank you very much. This is Clinton Donnelly from Donnelly Tax Law. Have a great day.